Good morning, everybody. We'll get started here in a couple of minutes. We'll get started right at 11.
Looks like our numbers are still climbing a bit, so I think we'll get started at 11:02. Thank you. All right. I'm sure we'll still have some folks trickle in, but for now our numbers are starting to slow down, so we'll get started. So hello, everyone. Thank you so much for joining us today. My name is Katie Cáceres. I use they, them pronouns, and I serve as the Policy and Performance Analyst for the Office of Financial Management, State Human Resources. I'm going to do my best to speak slower this time. It's going to be great. I'm joined by my co-presenter, Jessica. Jessica, would you like to introduce yourself?
Of course. Hi, everyone. My name is Jessica Manfredi. My pronouns are she, her. I am the student loan advocate within the Office of the Student Loan Advocate. Thank you so much for being here today, and I am excited to present to you a little bit more about PSLF.
Awesome. Thanks, Jessica. So as she said, we are here to speak with you all about the Public Service Loan Forgiveness, or PSLF program. Our goal today is hopefully to demystify the application process to help you get your federal student loans forgiven. We will be recording this webinar and it'll be posted on the website. The slides are also available on the WellSAC website. I'll go ahead and drop a link in the chat now so folks can look at that. All right. Actually, Jessica, if you could drop that link, that would be great. All right, so first off, we have some housekeeping items. And if you could go to the next slide when you get a chance also. I'm asking you to do two things at once. So this presentation is being recorded, as I said. We have ASL interpreters here today and CART services for live closed captions. The chat is disabled for participants and will only be used by panelists to share links and resources. Participants are on mute, so please enter your questions using the Q&A function and vote on questions you would like to have answered live. As I said, we will provide our slides for your reference following the presentation as well as this recording, so you can have access to the links. And we will have time for questions at the end of the presentation. We're hoping to leave at least 30 minutes. Also, if folks could use the Q&A feature and either ask their own questions or use upvoting to say which questions they want to make sure are answered, that would be helpful. Thank you. Next slide. So today we'll give you an overview of student loan debt crisis by providing some key data points for Washington State borrowers. We'll also cover Washington State's response to this crisis. We'll then shift gears to talk about how you can qualify and apply for the PSLF program. We will also discuss the specifics of the federal rule changes that went into effect on July 1, as well as some limited time opportunities, especially before the end of the year, to earn more PSLF qualifying payments. Lastly, we'll provide some resources and information about how to get individual support to help you in pursuing student loan forgiveness. So the PSLF, or Public Service Loan Forgiveness Program, is a federal program that forgives the remaining balance on your direct loans after you've made 120 qualifying monthly payments, or approximately 10 years, under a qualifying repayment plan while working full-time for an eligible public employer. And as a reminder, it looks like someone has their hand raised. We will be taking questions at the end of the presentation, but if it's an access issue, we want to make sure to address that. So please either use the Q&A or send us a message. Thanks. All right. So as I'm sure many of you are aware, the country faces a student loan debt crisis. Nationally, Americans owe $1.73 trillion in student loans. Student loan debt is also now the second largest household debt after mortgages. That's as of March 31st of this year. It's also surpassed credit cards and auto loans, as well as home equity revolving debt. Student debt now makes up 9% of total household debt and has increased by 566% over the past 20 years, which is almost 3 times greater than the increase in mortgage debt. In the last quarter alone, national student debt increased by $9 billion. Student loan debt is also a multi-generational issue that affects borrowers of all ages and jeopardizes millions of families' long-term financial security. While student loan balances have risen for all age groups, older borrowers have seen the largest increase. Student loan defaults rise with the borrower's age, and parents and grandparents take on debt to help younger generations pay for their education. There's also been a 37% increase in senior citizens with federal student loan debt since March of 2017. This is the highest increase in federal student loan debt of any other age group, with the second highest being borrowers aged 50 to 61. So to give you all a snapshot of what student loan debt looks like in Washington State, as of June 30th of 2023, we have over 804,400 federal student loan borrowers. Our outstanding federal student debt balance is $29.1 billion, and our average student loan debt per person is $36,176. We put these numbers here not to intimidate anyone, but really to try to normalize student debt as much as possible. I know that folks can have shame or negative feelings or emotions that are brought on by finances and debt. I myself am working through those emotions. So we really want to drive the point home that student debt is normal and millions of people have it. So there's absolutely nothing to be ashamed about. Another exciting thing I want to highlight is the PSLF acceptance rates have drastically improved in recent years. So unfortunately, when it was first launched and people first became eligible, the eligibility criteria to qualify for the PSLF program was complex, leading to low approval rates for individuals who would otherwise qualify. The PSLF program was implemented in 2007, so the first folks became eligible in 2017. Between fall of 2017 and October 31st of 2020, 31% of PSLF forms were denied. However, in recent years, federal level updates have made the program easier to access, which has significantly increased the overall percentage of accepted forms. Between November of 2020 and June of 2023, only 7% of PSLF forms have been denied. I also want to highlight that people in Washington State are benefiting from the PSLF program, and more folks are having their student loans forgiven daily. This data is all from the Department of Education's website. As you can see, in March of 2022, I know that it's a little bit small, but we'll be sharing the slides so you can zoom in after, or zoom in on your screen. In March of 2022, there were about 3,000 folks with processed PSLF discharges. And then as of June of this year, that number increased to over 14,890 borrowers in our state who have now received forgiveness under PSLF. This translates to $972.1 million of debt that's been forgiven through the PSLF program for borrowers in our state. I wanted to share this data with you just to demonstrate that this is working. I understand that it's confusing and really challenging to get all the paperwork and to deal with loan servicers, but it really can pay off. So you may be asking yourself, if we're talking about federal student loan debt and the PSLF program is a federal program, why are state employees here speaking with you today? Well, Jessica and I will be the first to tell you that we are all very fortunate to live in a state that in many ways is leading the charge in state level work to address the student loan debt crisis. We have a law in our state, in the state of Washington, called the Student Loan Bill of Rights, which was passed in 2018. This law created the Office of the Student Loan Advocate, which is who Jessica is with. It also allows our state to enforce state consumer protection laws against student loan servicers and requires servicers to notify borrowers annually about the Student Loan Advocate's office and have information on how to contact them on their website. Most importantly, it allows borrowers like you to submit questions and complaints to the Office of the Student Loan Advocate and to get individual assistance and resources with your student loans. I'll share the information with you at the end of the presentation on how to contact the Student Loan Advocate as well. So in March of 2022, Washington state legislation was passed called Engrossed Substitute Senate Bill 5847. This is the bill that created my position and required OFM to partner with the Student Loan Advocate to increase awareness about the PSLF program. As a result of this bill, we've been working with state agencies to implement a PSLF employment certification program. We've also been directing agencies to send their awareness materials the Student Loan Advocate developed to help educate people on how to access the PSLF program, which is why we're here with you today. And now I will pass it over to Jessica.
Thank you, Katie. So now that you know what the PSLF program is, you may be asking yourself, how do I actually qualify for this program to get my loans forgiven? In a very straightforward way, you need 4 things. You need 1, the right type of employment, 2, the right type of loan, 3, the right type of repayment plan, and 4, the right number of payments. Okay, so let's first talk about what counts as qualifying employment for the PSLF program. Employment for PSLF needs to be an average of 30 hours a week or more. This also means that you can have multiple part-time public service jobs that add to an average of 30 hours a week or more, if they are qualifying public employers. You must be directly employed by the qualifying public employer. This means that most contractors will not qualify. However, an exception exists if you work in a state that has laws that prevent an otherwise qualifying employer from hiring employees directly to fill positions or provide services. An example of a group of people that qualify under this exception in Washington state are public defenders who must be hired as contractors due to state law. Public employer means any level of government, so that can be tribal, local, federal, state, or a nonprofit organization. The role or position that you hold does not matter. It just matters if your employer is a qualifying public service employer. You also need to be employed at the time that you apply for forgiveness. It is important to note that labor unions or partisan political organizations are not eligible for PSLF. This does not mean that you cannot be represented by a labor union. You just cannot be directly employed by the union. Next, let's cover which federal student loan programs, federal student loans are eligible for forgiveness through the PSLF program. Eligible loans for the PSLF include direct loans, whether that is a subsidized or an unsubsidized loan, and it also includes Grad Plus, Parent Plus, and consolidated direct loans. All the other loans that are not circled in the green square on this slide, including Perkins loans and FFEL loans, are only eligible once you consolidate them into a direct consolidation loan. Please note that Perkins and FFEL loans are not considered direct loans. They have also been both discontinued at this time, so you can no longer get them. So to reiterate, both Perkins and Federal Family Education, or FFEL loans, are not eligible for forgiveness under PSLF unless you consolidate them into a direct consolidation loan. Parent Plus loans are kind of on their own category because even though they are considered direct loans, you may need to consolidate them if you'd like to gain access to an income-driven repayment plan. If you have Parent Plus loans and you are pursuing public service loan forgiveness, I recommend reading a section on our website called PSLF and Direct Parent Plus Loans to better understand your options for repayment. I'll have Katie post a link to our PSLF website on the chat now. So at this point, you may be wondering how to check which type of federal student loans you have. You can log in into studentaid.gov to locate your federal student loan information, including your loan type, your loan balance, and your loan servicer. To log in, you will go to the right corner of the page, and it will ask you for your federal student aid ID, or also known as FSA ID. It is your username and password. If you do not have one, you can click to create an account next to the login button. Once you log in, it will bring you to a dashboard. This is a dashboard that will show you key information about your federal student loans. If you want a comprehensive breakdown of all of your loans, you will want to click on View Details on the right side to My Aid, and it will bring you to a page listing all the aid that you have received, including both grants and loans. The breakdown of your loans will include what type of loan you have, the balances, and interest rates for each individual loan. On the right side of the page, you will be able to view your loan servicer information under My Loan Servicer. If you click on the link under My Loan Servicer, where it says View More, you will be brought to a page with your servicer's website, phone number, and other contact information like mailing address. It is a good idea to view your loan servicer details because while it is uncommon, you may actually have more than one servicer. Okay, so once you have confirmed that you have the right type of employment, the right type of loans, the next thing that you want to do is make sure that you're on the right type of repayment plan. Any of the income-driven repayment plans, also known as IDR, are eligible for PSLF. These IDR plans include income-based repayment, or IBR, pay as you earn, or payee, saving on a valuable education, SAVE, formerly known as repayee, and income contingent repayment, ICR. And also the 10-year standard repayment plan, which is the plan that you usually get placed under automatically when you graduate if you don't do anything. You typically do not want to repay your loan under this 10-year standard repayment plan because you will likely pay off the entire loan balance before you become eligible for forgiveness. Some periods on it are okay, as long as you also have periods under an IDR or an eligible forbearance and deferment period. Repayment plans that are not eligible for PSLF include the 30-year standard repayment plan, available for consolidated loans, as well as any graduated and extended repayment plans. You can get help picking an eligible PSLF repayment plan using the loan simulator. The loan simulator will ask you to log in with your FSA ID, username, and password. It will pull your actual student loan data, balances, etc., and ask you questions about your household income, household size, tax filing status, and other information. Based on that information, it will then calculate for you an estimated monthly payment under different repayment plans. So it's really a useful tool to help you choose the best repayment plan for you. So if you're not sure which repayment plans are eligible for PSLF, you can use this slide along with the loan simulator to help you pick a plan that is eligible for PSLF. As a good rule of thumb, usually the lowest monthly payment available for you under an income-driven repayment plan is going to maximize the forgiveness that you get at the end with PSLF, unless your lowest IDR monthly payment is higher than the 10-year standard repayment plan. In that case, the 10-year standard repayment plan may be a better option for you. Please note that our office does not have the capability to estimate monthly payments for borrowers. Please use this loan simulator if you need assistance with picking out a repayment plan that best fits your needs. Okay, so you have the right type of employment, the right type of loan, the right type of repayment plan. The last piece that you need to make is 120 qualifying payments. All of these payments must be while under a qualifying repayment plan and for the full amount due as shown on your bill. This includes $0 payments for those who qualify for it under an income-driven repayment plan. The only time these two rules don't apply is if you're under one of the accepted types of deferment or forbearances at any time during that month. Those payments need to be made after October 1st, 2007, because that is when the PSLF program started. The payments do not need to be made consecutively, meaning one after the other, or with the same student loan servicer, or while you work at the same employer. You can actually work for 10 different employers in 10 years. If they're all qualifying public service employers, that's okay. One tip to make sure that you're making on-time and complete payments is to sign up for automatic debit with your loan servicer. It is important to keep in mind that there are times where you are actually not allowed to make or you can't make qualifying payments. You can only make qualifying monthly payments during periods you have a payment due. This means that you can't make a qualifying payment while you are in an in-school status or on your grace period, which is usually 6 months after you either graduate or stop attending school at least half time, and also in certain types of deferments or forbearances. You can, in some cases, decline your in-school deferment for previous loans in some circumstances. If you return to school, for example, to get a master's degree, you can decline the in-school deferment for your undergraduate loans to continue making qualifying payments on those loans. However, you would not be able to decline the in-school deferment for the new loans that you receive for your graduate education. These are the deferment and forbearances that can count as qualifying payments if you were employed an average of 30 hours a week at a qualifying employer during that period. Most of them are pretty self-explanatory, like cancer treatment, economic hardship, or military service. Others are a little less known, like the administered forbearance due to local or national emergency, like the COVID-19 forbearance, or the administered forbearance for collecting supporting documentation from a borrower, for example, when you apply for an income-driven repayment plan. All of these types of deferments and forbearances count as qualifying payments, even though you're technically not paying anything during these periods. Another type of qualifying forbearance is the COVID-19 administered forbearance. This was also known as the payment pause, which the U.S. Department of Education automatically applied to direct and other Department of Education held loans due to the COVID-19 emergency between March 13, 2020 and August 31st, 2023. These periods under the payment pause will count as PSLF qualifying payments, even if you did not submit payments, if you were working full-time for a qualifying PSLF public employer. And even though we have been talking about most of the rule changes throughout 1 through 4, I also wanted to separately highlight these changes that happened to PSLF this year. The Department of Education started implementing PSLF regulations that went into effect as of July 1st, 2023, that relaxes some of the previous rules, making the program a little bit easier to access for borrowers. For example, there is now a single standard of full-time employment as an average of 30 hours per week. Before, employment for PSLF was primarily defined by the employer's definition of full-time, which is typically 40 plus hours a week. The new rules also require employers to give adjunct part-time faculty credit of at least 3.35 of work for every credit hour taught for PSLF. While we had made this change in Washington State through ESSB 5847, the bill that Katie talked about earlier, this rule is now nationwide and can help part-time faculty across the nation. The new regulation also allows public employers to certify employment for non-direct employees, like contractors, if that individual provides services that by state law cannot be performed by a direct employee. So there's a little bit of an exemption for people that are contractors in this very specific situation. Now, we're also able to permanently count certain periods of deferment and forbearance towards PSLF, the ones that I highlighted in the slide earlier. Borrowers may now receive PSLF credit on payments that are made late, installments, or in a lump sum. Before, only on-time payments counted. Borrowers will receive a weighted average of existing qualifying payments toward PSLF when they consolidate their direct loans starting January 1st, 2024. Previously, when you consolidated your loans, you could actually lose all of your PSLF qualifying payments and the progress that you had made towards forgiveness. The rule is different for those consolidating before the end of 2023, and I will talk about that a little bit more in a future slide. Federal Student Aid has also made available a buyback option for certain periods of forbearance and deferment that are ineligible for PSLF. The details for this buyback are already available on the Federal Student Aid website. I'll have Katie share the link for that in the chat. The Department of Education is asking that people actually wait to utilize this buyback option until the IDR account adjustment is applied to their account. And we're going to be explaining to a little bit what that is in a later slide. And waiting until this adjustment is complete before considering buying back any periods. I do want to highlight, though, that this buyback option will not be available for periods of in-school deferment or for grace periods. Finally, Federal Student Aid has also formalized the reconsideration process for PSLF. For example, if after all your PSLF payments are counted, you disagree with the number of payments Mohila applied to your account, you have a formal way to ask for Federal Student Aid to review your account again. And now go ahead and pass it back to Katie.
Thank you, Jessica. All right, so now that you know what the PSLF program is, you may be asking yourself, how do I apply for the PSLF program to get my loans forgiven? If you're ready to apply for PSLF, you can use the PSLF help tool, which I'll drop in the chat, to generate and digitally sign what is called the PSLF form. This is basically the form that is used to certify your employment and to apply for the PSLF program. There's a new DocuSign feature within the PSLF help tool that allows both you as a borrower and your employer to digitally sign the PSLF form. The tool then automatically submits the digitally signed form to Mohila, who is the current PSLF servicer who will review your form. A paper form is also available, but generally we want to discourage folks from using it unless they need to, because the PSLF help tool helps prevent the most common errors that people make on the form. You also either need to fax or mail the paper form, so it's more difficult to track, both for you as the borrower, your employer, and Mohila. Submitting the form via the PSLF help tool allows you to track the form while it processes on the Federal Student Aid website. It is best practice to submit the PSLF form every year and whenever you switch employment. I see there's a few questions in the chat about that, but you don't need to wait 10 years before you apply for PSLF. Again, we encourage you to submit a PSLF form every year to your employer to count that time. This helps you evaluate your eligibility on a yearly basis and adds to your number of qualifying payments so you can track your progress. The main reason that you don't want to wait until year 10 to submit all your forms is because it can be difficult to track down employers to certify your employment. Also, if there's something wrong, like maybe you're in an incorrect repayment plan, you may find out that information too late. So submit your form every year and whenever you switch employers. And another thing I would like to add is that you need to be currently employed by a public service, by a qualifying employer at the time you apply for PSLF. You can certify past employment, but you need to be currently employed. So one situation we've run into is folks retire and then apply for PSLF, and unfortunately they're no longer eligible. So make sure you're certifying your employment as you go. All right. Next, I will drop a link in the chat to the PSLF help tool where you can generate that form. So there's the link. Key pieces of information you will need are your employer's federal identification number, your dates of employment, and your employer's PSLF contact email address. If you have worked for other Washington state agencies or public institutions of higher education, you can use the PSLF directory to find the email address of the PSLF contact and that agency's employer identification number. I am also currently working on a directory for educational service districts and school districts to compile the same information. So if you're here from the school district, a directory for you all is on the way. So once you submit your PSLF form, let's see. Yes, okay. Once you submit your PSLF form, you're determined to be eligible, then your loans will get transferred to Mohila if they're not already servicing your loans. This loan transfer can take up to 90 days. Please note that you may receive multiple letters or notices regarding your PSLF qualifying payments. The initial letters you receive may not include all the PSLF qualifying payments that you may ultimately be eligible for. This is why it's a good idea to keep your own record of the PSLF forms that you've submitted. If you apply for PSLF, you can check the status of your application on the MOHELA website. I will post a link in the chat. Oh, thank you, Jessica. You're on it. So Jessica just posted the link in the chat to the website where you can check your PSLF form status once you submit it. So now I want to briefly mention a special opportunity that's going on right now that may allow you to get extra PSLF qualifying payments and potentially reach forgiveness faster: the income-driven repayment one-time account adjustment. So the Department of Education created the IDR Account Adjustment to try and correct for those borrowers who are unnecessarily steered into forbearances and deferments in the past, when they could have qualified for an income-driven repayment plan and made progress towards forgiveness. The payment adjustment is a limited time opportunity available right now for borrowers to get closer to forgiveness, and it will be applied to all Department of Education held loans between now and 2024. This adjustment will allow certain periods of forbearance and/or deferment to convert into IDR payments for borrowers with 12 or more consecutive months of forbearance, 36 or more total months of forbearance, months in economic hardship or military deferments after 2013, and periods of deferment before 2013, excluding in-school deferment. Any time spent in repayment will also convert into IDR payments, including any payments made before a consolidation, if applicable, but it does not exclude periods of bankruptcy or default. Any borrowers with loans that have accumulated eligible time in repayment of 20 to 25 years will see automatic forgiveness, even if they're not currently on an IDR plan or plan on applying for PSLF. Any additional IDR payments a borrower may get will count towards PSLF if they were employed in a qualifying public sector employer during that period. Loans that hit forgiveness thresholds, whether that is the 240 to 300 qualifying payments for IDR forgiveness, or the 120 qualifying payments for PSLF forgiveness, will start to get forgiveness as early as this year. And Jessica, it looks like someone asked for the link to the IDR account adjustment video. That is on our PSLF WASAC webpage, which is in the chat. It was maybe the third link that I posted.
I'll just share it again. It's okay.
Awesome. Thank you so much. All right. So it's important to know that final IDR and PSLF credits may not be applied for some people until 2024. While most people will get the payment adjustment applied to their account automatically, I also really want to highlight that some people, depending on their circumstances, may need to act before the end of 2023 to really take advantage of this opportunity. For example, you may need to consolidate your loans if you have commercially held Perkins or FFEL loans. And because I just mentioned consolidation, you may be asking yourself, who are those who may want to consider consolidating before the end of 2023 to take advantage of the IDR account adjustment? There are 3 key groups of people who should strongly consider consolidating before December 31st of 2023. This includes if you have commercially held FFEL or Perkins loans, if you have U.S. Department of Education held FFEL or Perkins loans but want to qualify for PSLF, or if you have loans with different PSLF or IDR qualifying payments. For example, if someone who submitted their PSLF form and found out that their undergraduate loans have 80 PSLF qualifying payments, while their graduate loans only have 60 qualifying payments, you'd want to consolidate before the end of the year. So if you apply to consolidate your loans between now and December 31st of 2023, you will not lose your PSLF or IDR credit due to the IDR account adjustment. This is important to know because in the past, if you consolidated your loans, you could lose your progress towards forgiveness. Right now, if you consolidate your loans, any type of loans, including Perkins, FFEL, or direct loans, your new direct consolidation loan, as a general rule of thumb, will be credited with at least the same number of qualifying payments as your oldest loan. For example, if you have an older subsidized loan from your undergraduate degree with 80 qualifying payments and a newer subsidized loan from your graduate degree with 60 qualifying payments, your new consolidated loan, again, if you consolidate by the end of this year, would have at least 80 qualifying payments. If you do consolidate your loans between now and the end of 2023, it's also important to know that your PSLF payments your PSLF payment count will temporarily reset to 0. This means that you may get a letter from MOHELA after you consolidate saying that you have made 0 or a very small number of qualifying payments. But don't panic. Once the account adjustment is applied to your account, which could take until sometime in 2024, you should get your PSLF qualifying payments back and receive an updated letter from MOHELA about the missing PSLF qualifying payments. On the other hand, if you were to wait to apply to consolidate your loans on or after January 1st of 2024, the new consolidated loans will not be credited as generously. It will only be credited with a weighted average of those qualifying payments made to direct loans that are included in the consolidation. The weighted average will not include payments made to FFEL or Perkins loans and will not give you 100% of your PSLF credit. In short, this means that if you're considering consolidating your loans, it's best to do so before the end of 2023. And now I will pass it back to Jessica.
Thank you, Katie. All right, so I know that we have been talking for a while now and that this is information overload, but I promise you that we're almost at the end here, okay? But other than all of this PSLF stuff that we've been thinking about, what are some other things related to student loans that you should be aware of? So there's a lot of things happening in the world of student loans right now, and I'm going to highlight some of these important changes for you. So unfortunately, as a lot of you may have already heard through the news, the Supreme Court issued a decision a few months ago to officially block the one-time debt relief, which was commonly known as the Biden debt relief. This program would have forgiven $10,000 to $20,000 of federal student debt for millions of borrowers who met specific income qualifications. Under the court's rule, the Department of Education cannot implement this one-time debt relief program, but the Department of Education is currently considering alternative ways to provide debt relief to borrowers. There are no details about this debt relief. Very little is known at this point in time about who may qualify for this new path of forgiveness that the Department of Education is exploring, but keep an eye out for more information and coming about that soon. There is also a program going on right now that's called the Fresh Start program, which can remove folks that are in default, right, and make them eligible for Title IV aid that is currently in effect through August of 2024. It's usually a much longer process for people to get out of default. So the Fresh Start program, if you are in default or you know somebody that's in default on their federal student loans, make sure that they look into this because it's much easier. It typically just takes a quick phone call or going into a website. So highly recommend that people look into this if they might be in default right now. There is also a new income-driven repayment plan that you may also have heard about in the news called the SAVE plan, or the Saving on a Valuable Education plan, which is the newest, most generous repayment plan the Department of Education has released to date. It increases the discretionary income exemption from 150 to 225% of the poverty line, which means that more of your income can be protected under this plan, allowing for lower overall payments for most borrowers. It is important to know that MOHELA is also changing website platforms, and the process is starting right now of that change. If MOHELA is currently your servicer, or maybe your servicer in the future, right, if you're applying for PSLF, in the coming weeks and months, you will receive a notice of transition from MOHELA that they are about to transition your federal student loans to this new platform. You will also be notified by MOHELA when the transition is complete and when your loan information has been loaded to the new system. You should watch closely for each notice that you receive from MOHELA for more details on this transition. Especially look out for any instructions you may need to follow once the account transition is complete. Finally, there are a few major servicers transfers that have happened recently. If you are impacted by a loan transfer, I recommend reviewing Federal Student Aid's blog post on this topic to know what's next after student loan transfer. And the link for that is on the slide, and Katie will also be sharing it in the chat with you. Finally, with return to repayment already being here, I want to highlight a few things. Interest began to accrue on September 1st, 2023, with bills or statements arriving for most people between late September, October 2023. You should have received your billing statement or other notice that you have to repay, hopefully at least 21 days before your payment is due, though we have heard that for some borrowers, it did arrive a lot shorter than that. Your first due date is was sometime in the month of October for most people, and it should have been clearly stated in your bill. And because so many people are entering repayment at the same time, if you have tried calling your servicer, or if you try calling your servicer right now, you are likely to experience long call holds and wait times for assistance. So what I'm recommending people do is that if you can do something electronically by self-servicing on the studentaid.gov website, things like applying for income-driven repayment, applying for PSLF, etc., please do so instead of calling your servicer if you are able to do so. I also want to highlight a few resources that could be helpful to you as you navigate your student loans and apply for the PSLF program. First, we have a steps to apply for PSLF document, which has step-by-step instructions on how to apply for PSLF. This is a great document, especially for people who are just starting out from scratch when it comes to PSLF, but also for those who are already in the program and want to make sure that they don't miss anything. Also, we have a PSLF frequently asked questions document, as well as other helpful links and resources that are all available on our website, wasac.wa.gov/PSLF. So check it out. I'll have Katie once again post that link in the chat just in case anybody has missed it. If you have specific questions about your case, or maybe you would like to submit a complaint against your student loan servicer, you can actually use our complaints and question forms available at studentcomplaints.wa.gov. Again, that is studentcomplaints.wa.gov. If you utilize this form, make sure that you select student loan questions and complaints form from the drop-down menu. Please note that it is currently taking us about 4 to 6 weeks to get back to borrowers. This means that if you do submit a question to us today, it is possible that I will not be able to get back to you until the end of the year, right? Which we talked about some important deadlines, especially when it comes to consolidation. So I just want to be fully transparent with you and let you know that most likely people that submit complaints to us today and forward may not hear back from us until late December, January. But this is not to discourage you from seeking help from us. It's just to make sure that you are aware that due to the limited capacity, I'm the only person that is currently answering those questions right now. We might not be able to get back to you before the deadline for the IDR account adjustment to consolidate specifically, which is December 31st, 2023. Thank you so much for the opportunity to present to you today. Now we are going to take a few questions from the Q&A. Please note, we may not be able to get to every single question. So if you can use the upvoting feature for a question that you really want answered, I recommend that you do so. I would also like if you can fill out a survey to help let us know how we're doing and to help us continue providing resources like this one for Washington student borrowers. I'll go ahead and have Katie post the link to the survey on the chat. And then we'll go ahead and start taking some questions.
Awesome. Thank you so much, Jessica. So again, use those upvote features. We currently have 45 questions and about 40 minutes left in our webinar. So we're going to do our best, but I don't think we'll be able to get to everyone. So definitely upvote, take a look at the list, and let us know which ones you want us to answer. So it looks like the first question is there any benefit to applying for PSLF if you haven't yet reached your 10 years with an eligible employer yet? I've heard both yes and no on this. I would love to understand if there's any benefit to applying early. And I could take this one. Yes, as we mentioned earlier in the presentation, Federal Student Aid and Jessica and I recommend that you apply every year. You submit a PSLF form every year. This helps you track your qualifying payments. It helps you troubleshoot issues as you go. And also, depending on which agency you work for, it makes the process easier. As you know, some agencies don't have the resources, or like maybe you work for a nonprofit and the nonprofit closes. So best practice, certify every year.
And just to add, Katie, also when you switch employers, right? That is also another time that it may be beneficial, just so that you don't have to keep hunting down people later on.
Absolutely. Thank you for that, Jessica. And also, as we mentioned, you have to be currently employed by a public service provider or employer when you apply for PSLF. So don't wait till you retire. Don't wait till you're not working. Apply while you're working. All right, next question. It's from Crystal. What if you have past student loan debt due now due to a bachelor's in science, now we're pursuing an MBA. After 10 years of payments on the initial debt, will the total debt be forgiven for the Bachelor of Science and the new loan debt for the MBA? Jessica, do you want to take this one?
Sure. So, Crystal, the answer is it depends, right? If you're done with your MBA right now, right? You're already finished with your classes and you already got that degree. You can actually consolidate your Bachelor of Science loans with your MBA loans in order to place them on the same 10-year timeline for forgiveness. But this is only the ability to do that is only going to be for loans that you consolidate by the end of this year, right? Before December 31st, 2023. So if you're still going to school for your MBA, unfortunately, you're going to have to wait until you're done with your degree in order to be able to do that consolidation. If that consolidation happens after December 31st, 2023, then unfortunately, you won't be able to keep all of your credit, your 10 years of PSLF credit. You're actually, if you consolidate those loans together, you will get a weighted average of those payments. Now, whether or not it makes sense for you to consolidate at that point depends on a few factors. For example, if you are really close to forgiveness on those Bachelor of Science loans, then you might just want to maybe get that forgiven so that you can get rid of that payment, right? First. Or maybe it's not that different, right? Like maybe you've only been paying your Bachelor of Science for maybe a couple of years. So then in that case, consolidating it together might make sense because then it will give a little bit of credit on the consolidation loan. But the answer is, it depends on when you consolidate and whether you're able to consolidate right now. If you're going to school right now for your MBA, you're going to have to wait until you finish school to consolidate. And at that point in time, the weighted average rule is what's going to count, not the IDR account adjustment rule. And if this is still confusing to you, feel free to submit a question to us, just knowing that, like I was mentioning earlier, we probably won't get back to you before the end of the year.
Thank you, Jessica. All right, next question is, I've applied to PSLF early, but none of my payments that I've made over the last 6 years while working for an eligible employer have been logged. Who should I talk to? Jessica, do you want to take this?
Yeah, can you ask that question one more time? Sorry.
Oh, absolutely. Yeah. So this person asks, I have applied to PSLF early, meaning before the 10 years, but none of my payments that I've made over the last 6 years while working for an eligible employer have been logged. Who should I talk to?
So I guess it depends, right? Because if you're already with Mohila and the form is already showing as an approved form, right, on your account, then it is possible that something about those payments made it so that they weren't eligible, right? Typically because you were in an incorrect repayment plan. You may have to wait until the income-driven account adjustment is applied to your account so that those payments that may have been potentially made in an incorrect repayment plan convert into PSLF qualifying payments. But if you know that you were in a correct repayment plan, right? So you were either in the standard 10-year standard repayment plan or you were in an income-driven repayment plan, and it's still not showing correctly, then I would recommend that you submit a complaint to us and we can look into what's going on for you.
Thank you for that, Jessica. All right, next question. Do the 120 months of qualifying employment have to be consecutive? No, they do not. So that's a simple answer. Thank you for that question. No, they do not need to be consecutive. Another thing I want to highlight is that what's considered full-time, generally speaking, is 30 hours per week, an average of 30 hours per week. And that can be combined with multiple part-time public service employers. So say you work 15 hours at a nonprofit and 15 hours at a different nonprofit, you can combine those and be considered full-time for PSLF. The other thing I want to highlight is that you will need to submit a separate PSLF form for each of your previous employers and each of your previous periods of employment. Okay. All right, next question. I think this is a Jessica question. My PSLF application was approved by Mohila, and I recently enrolled in the SAVE IDR plan. I have a mix of undergraduate and graduate loans. If I consolidate them into one direct loan, will the new direct loan default as an undergraduate or a graduate loan? I'm asking because I think there's a difference in what percentage your monthly income you have to pay towards undergraduate versus graduate loans, 5% versus 10%.
Great question. So when it comes to that difference in 5 to 10% of what you pay in graduate and undergraduate loans, that is not in effect right now, right? It's not actually going to be into effect until July 1st, 2024. So this is just important for you to know that the amount that you're paying right now, the amount that was determined under your SAVE plan right now, does not take that into account, because that benefit is not going to be in place until July 1st of 2024. So I just wanted to make sure that you knew that. Now, the other part to this question is, if I consolidate them, what's going to happen? So whether you consolidate them or you don't consolidate them, your the average the amount that you're going to pay, whether it's 5% or 10% of your discretionary income, is going to be determined on a weighted average, right? Of your loans, both undergraduate and graduate loans. So it's going to be a number between 5 and 10%, and it's going to be individual to your loans, right? Because it is a weighted average that's going to be calculated. But once again, whether you consolidate or not consolidate it, you're not going to see that change until July 1st, 2024. But you can consolidate them if you want, is basically what I'm saying. If that's the one thing that you're worried about, you're still going to be able to get that weighted average once you consolidate.
Thank you for that great question and answer, Jessica. Next question is, can you provide more information on consolidating? And Amanda asked this at 11:51. So yeah, Jessica, do you have any more information or links we can share?
Yeah, of course. If you are considering consolidating, the consolidation process is not a difficult one nowadays. It is done, we prefer that you do it online because it's a lot easier than doing the paper version. Most people can get through the process in 20 to 30 minutes. And again, it's not complicated. I'm happy to share the link on or where you apply to consolidate once I'm done answering this question. And hopefully Katie can pick another one that she can answer next, so that I just have enough time to go look for that link. But anyhow, the consolidation process is not complicated, is what I'm trying to convey to you. And if you're interested in consolidating, you can do so on the Federal Student Aid website, very easily. So not a complicated process, and you should be able to do it without too much difficulty on your own.
Awesome. Thanks, Jessica. I did just drop a link in the chat to the page on the Federal Student Aid website about consolidating student loans. If there's a different link you want to share, Jessica, go ahead. But there is that resource available.
Yes, that's great. Thank you.
Awesome. Yes, absolutely. All right. And just remember to use the upvote, folks, to make sure we're answering the questions that most people want to hear. Next question is, I was automatically placed in forbearance by Mohila. Will the time that I am in forbearance count towards qualifying payments? So what I'll say about that is it depends on the type of forbearance. So I did share the slide deck with folks. We have a slide, I believe it was slide 30, that lists out the different kinds of qualifying forbearance that count towards PSLF. But Jessica, did you have anything you wanted to add to that?
No, other than that, a lot of people have been placed in administrative forbearance because they applied for SAVE and their application hasn't been processed yet. Also, Mohila did process some SAVE applications incorrectly. And as a result, they're trying to correct those issues right now. You might also have been placed into an administrative forbearance because of that. So most types of administrative forbearance, if that's what you're under, will qualify for PSLF. And again, if you recently applied for income-driven repayment or recertified, most likely that's what's happening, and it should count towards PSLF. But if you're not sure, then I recommend reaching out to your servicer to ask what kind of forbearance you're actually under.
Awesome. Thank you for that, Jessica. I see that Patricia has their hand raised, and if folks could use the Q&A feature, please, that would be great. I'm going to make one exception for Patricia. Patricia, if you want to go ahead and raise your hand again, just because I have been in contact with Patricia, and I think that Patricia is going to ask about qualifying contractors. So I will take your question and allow you to talk. But again, this is an exception. Generally, folks use the Q&A. Thank you.
Hi, thank you. Can you hear me okay?
Yes, I can. Thanks.
Yeah, well, thank you. First of all, thank you so much for all this guidance and clarification. I spent a good 30 hours on the student aid website and just found, there were just some pieces of information I didn't quite understand. One of the pieces, as you shared earlier, was that contracted employees could qualify if a state has a law that prohibits the law from directly hiring that employee. What I'm exploring is I've been a IP individual provider for individual adult with disabilities, and trying to, just better determine if there's actually in the law that states the government or that Washington is prohibited from hiring IPs. The closest I can find is something that says the legislation requires that IPs are hired by a CME. So by deduction, I'm guessing that Washington can't directly hire. And there are so many other benefits other than PSLF that might be an outcome of that. If PSLF is a benefit for individual providers in the light of the shortage of caregivers we have in the state, this could be a benefit that we could advertise and recruit more qualified, and even just people moving out of college, and kind of address the shortage of IP. So I'm asking not only just for myself, but as a means for us to recruit IPs for people with disabilities, elderly, and so forth. So then my second question, and I'm so sorry, is for the IDR account adjustment, does slide 30 and 31 that shows all those different types of qualifying forbearance and deferments account, or are those the ones that are counted towards the IDR account adjustment, or is it expanded for the IDR account adjustment? And how do we find out what type of forbearance or deferment we're in when we've consolidated and our new service provider doesn't have that information? Thank you so much. And please let me know if there's anything I need to clarify.
Yes, absolutely. Thank you so much for sharing, Patricia, and definitely appreciate your work doing research on the contractor exception for individual providers. I can speak about that after Jessica. I do want to invite Jessica to answer your second question first, and then we can circle back to the contractors.
So the first thing that I would say is that even though you consolidated your loans, your servicer should still have your entire loan history. They have access to that information. And if they told you otherwise, that is incorrect information, okay? So if you want an account of all of your forbearances and deferments and all of that stuff and what they were, and your servicer is basically saying that they can't provide that to you, feel free to submit a question to us. Again, I most likely will not be able to get that information to you before the end of the year, but it's information that you can have available, later on in case you want to check if the IDR account adjustment was correctly applied to your account. So that's part of the question, right? The other question about the types of forbearance and deferment under PSLF, so that is an expansion, right, to the IDR rules. The IDR rules are very specific, right? The IDR account adjustment rules are very specific. I will go back to that slide just so that we can take a look here together. So give me 1 second here. So these are the types of forbearance and deferments. It has nothing to do with so much the type, it has to do with the amount, right? So 12 or more consecutive months of forbearance, 36 or more total months of forbearance, months in economic hardship or military deferment after 2013, and periods of deferment before 2013, again, excluding in-school deferment. So the IDR account adjustment has more to do with the quantity, like how long you were in forbearance, not necessarily the types of forbearance that you have. The only type of forbearance that I'm aware that is excluded is periods of bankruptcy, right? That can be labeled sometimes as a bankruptcy forbearance, which can be confusing to people, and periods of default. And those are just called default. They're not a forbearance, they're just periods of default. So the other slide that talks about an expansion, right, of the forbearances and deferments, that's a separate rule, and it has to do specific with these types of deferment and forbearance, right? So it is possible, for example, if you only had, and I'm just throwing out there, 6 months of cancer treatment deferment, for example, that may not count under the other rules that we were talking about, but it will count because of this new regulation that is specific to PSLF, right? So IDR has more to do with the amount of time that you've been in forbearance, certain types of deferment, but this is separate. This is a separate rule. Hopefully that answers your question.
Thank you for that, Jessica. And now just circling back to the contractor question. Thank you again for bringing that forward, Patricia. We are currently determining how to approach this. As Jessica mentioned previously, we've identified and confirmed that contracted public defenders with the Office of Public Defense do qualify. They're actually having similar recruitment and retention issues to what you mentioned, Patricia. And generally these contractors don't qualify for a lot of benefit of state service, and so it's hard to get people to fill those positions. So we are looking at what we can do to help with recruitment and retention for those qualifying contractors. Our guidance has been, OFM's guidance has been to contact the PSLF contact at your agency and ask them. And then the PSLF contact will reach out to their program AAG to try to find the relevant laws. What I will say is, if you think you might be a qualifying contractor under this exception, and Patricia, I know that you've already reached out to me, please email me at pslf@ofm.wa.gov, and I can help you discuss this with the PSLF contact at the agency. What we're finding is that I think this needs to be a little bit more of a guided conversation that happens. And, since there is this issue of recruitment and retention, especially in healthcare, I think it's a great opportunity to leverage this as a benefit and help more folks access the program. So Patricia, I'll be in touch with you. Thank you again for bringing this forward. All right. Next question. And just as a reminder, if folks could use the upvote features, we have 53 open questions right now. We are not going to get through that in the next 17 minutes. So make sure you're voting on the ones you most want us to answer. So next question is, if I submitted my application to consolidate my loans on 10/15 of 23, is this considered being consolidated before 12/31 of 23 for the IDR benefit?
Yes.
Yep.
That's a great question. You just have to submit your application by the deadline, right? By December 31st, 2023. Now, I don't recommend that anyone submit their consolidation application on December 31st. One, because you should be out hopefully celebrating, but two, because websites have been known to crash, issues can happen, right? So if you know you have to consolidate, right, if you are under one of those three people that we talked about, those three situations that we talked about earlier, I would recommend doing sooner rather than later, but you just have to submit the application by December 31st, 2023. You don't have to have the actual consolidation be completed by that date. Great question.
Thank you for that, Jessica. Appreciate it. All right. Next question. is I'm curious to know more information. This is from William. I'm curious to know more information about the qualifying 120 months worth of payments. It seems like this stipulation is more geared towards folks with exorbitant loan amounts. What I'll share in my experience is, first of all, you'll want to make sure that you're on an income-driven repayment plan. The standard repayment plan that you get placed on is a 10-year loan repayment. Stay on that the whole time. There's no point in applying for PSLF because you'll already have paid your loan off after the 10 years. I'll share for me specifically, I don't know that I would say that my loans are exorbitant, like a medical doctor or something, but I have $64,000 in student loans, and you know, the PSLF program is going to help me get at least $40,000 of those loans forgiven by the end of when I finally qualify. So it doesn't have to be necessarily exorbitant. I mean, that will mean different things to different people, but it's definitely worth pursuing, especially if you work for, well, I mean, anyone in the public service sector generally is going to make less than the private sector, right? So generally, it's something that benefits all of us in the public sector, regardless of your student loan amount. Jessica, did you have anything you wanted to add to that?
Yes. So here's the thing that I have to tell people about 120 qualifying months. That was stipulated by Congress back in 2007. So if you don't like that rule, contact your representatives, okay? Because Congress was the one that passed this rule. And the idea behind it is that they want you to stay in public service for 10 years, right? So like it's basically an incentive to get you to stay in the public sector. So that's the reasoning behind the 120 qualifying payments. And just to add to what Katie said about 120 qualifying payments, it is also supposed to be a program that benefits mostly people that will have an income-driven repayment plan that is less than what they would pay in the standard repayment plan, right? So people that would not be paying off that loan in 10 years because they can't afford to do so. So that's another thing to just keep in mind, that the program was designed for people that would typically qualify for a lower repayment plan on an income-driven repayment plan versus the 10-year standard repayment plan, which tends to be unaffordable for most people.
Thank you for that, Jessica. We'll circle back to the most upvoted one, but I want to take Teresa's question about Parent Plus loans next, because I know that we've had a lot of questions, Jessica, especially about Parent Plus loans. So Teresa asks, I have Parent Plus loans. My loans are with Ed Financial. Are they eligible for the PSLF program? And Jessica, do you want to take this?
Of course. So yes, your loans can be eligible for the PSLF program. Now, there's some specific circumstances about Parent Plus loans that make it a little bit more tricky for you to qualify for forgiveness. I am not going to go into detail on that today, because I literally could spend another 30 minutes just talking about that topic alone. My recommendation for you is to go to our website. I think Katie already shared it multiple times on the actual chat, but we can share it one more time. Go to our website, and then there's a section there that specifically addresses that question in more detail, explaining your repayment options under PSLF, which is what tends to be tricky under Parent Plus loans. So my recommendation is go there, read the information, and then if you have any questions, submit a question or complaint to me about your specific circumstance. So that's where I'm going to stop.
Thank you, Jessica. Awesome. Next question is, I have approved income-driven repayment plan, but the adjusted payment did not apply for the last month's payment. I was told by Mohila that I should do a forbearance application for last month and start paying from this month. do I get a penalty for this? How do I do the forbearance application for only one payment? And Jessica, do you want to take this?
Can you please submit a complaint to me? Because it seems weird that they would inform you to apply for forbearance. Yeah, just submit a complaint to me. I feel like your situation is a little more specific, and that just seems like weird advice from Mohila. So yeah, just submit a question or complaint to me, and I'll talk to you, address your issue one-on-one.
Thank you for that, Jessica. And I did send them the link to the complaint portal. All right. Next question is, how does the time in qualifying forbearance count towards the 120 payments? Does each month in forbearance count as a payment and subtracted from the 120? For the qualifying forbearance, as long as you're working for a qualifying public service employer during that time, it does count towards the 120 payments. So you can certify your employment during that time. Jessica, do you have anything to add to that?
No, not really.
Awesome, thank you. All right. Next question. Lisa, I see your hands up. I made one exception, but if you could please submit your question in the Q&A, that would be great. And then folks can upvote. We have a lot of ties for with 2 upvotes. So again, folks, take a look at that and see what questions you want us to answer in the next 9 minutes. All right, next question is on slide 40. Okay. Well, let's take this one first because it just got 3 upvotes. How can I speak with the student loan advocate? So Jessica's a student loan advocate, and what you want to do is you will need to submit a complaint using the student complaint portal. And that's how you get in touch with Jessica. Even if you email Jessica directly, what she'll tell you is to submit a complaint using the student complaint portal. Jessica gets a ton of questions. Right now, she's the only one in the state doing this work, but she is a wonderful resource. We want people to know about her and her office. She will be getting another team member soon, so our capacity will be expanding. But I'll type the answer, just submit a complaint using the student complaint portal.
Yes, please, if you can avoid, don't call or email, because I'm still gonna have to have you complete the form. It's unfortunately still something that we have to have you do. So if you can just skip all of those steps and just go straight to the complaint form, that will get you the fastest response.
Thanks, Jessica. All right, next question is on slide 42. The example is for 2 subsidized loans. If I consolidate a mix of subsidized and unsubsidized loans, will I still receive the benefit of all the payments from my oldest loan? My understanding is that if you consolidate before the end of the year, you will get that. Jessica, do you want to add?
Yeah, so the reason why we put subsidized loan as an example specific, we don't like getting into too much into the weeds in the presentation, and this is definitely a weedy question. So there are some people, whenever you consolidate your loans, right, your subsidized and unsubsidized loans never truly mix together. And the reason for that is because for interest purposes, subsidized and unsubsidized loans have different benefits. I'm not going to go into that right now because the question is about the adjustment. But what you need to know is that when you consolidate, the unsubsidized loans are consolidated together and the subsidized loans are consolidated together. In some cases, and this is not very common, people may have taken one subsidized loan that is much older, or one unsubsidized loan that's much older than all the other loans. And maybe at that period of time, they didn't take any of the other type of loan, right? An unsubsidized loan. In that case, it is possible that only one set of loans of those subsidized versus unsubsidized will get a higher number of qualifying payments, which is the reason why we made that distinction there, because it has nothing to do with whether it's subsidized or unsubsidized. It has to do with the history of the loan. And because those never fully combine, right? The history only goes back to the type of loan, that specific type of loan, whether it's subsidized or unsubsidized. So for most people, they have taken subsidized and unsubsidized loans the entire time that they've gone to school. But some people may have been in certain circumstances where maybe for their undergraduate degree, they only took subsidized loans out. And then that could unfortunately lead to the subsidized portion of the consolidation having higher qualifying payments. Hopefully that answers the question.
Yes, thank you for that, Jessica. All right. And Jessica, if you want to take a minute to, well, actually, we're going to jump to John's question. When reaching the threshold, then what? Do I continue making payments and then await reimbursement? John, that's a really great question. Thank you for asking that. Jessica, do you want to answer that?
Sure. If you're 100% sure that you've reached that 120 qualifying payment and you submitted your PSLF form to MOHELA already, right? You could contact them to be placed in what's called an administrative forbearance, right? Until your form is processed. That way you wouldn't have to make more payments. The thing is, they will only typically grant you their administrative forbearance if you're really close to that 120 qualifying payments, and they can already tell on their end. In some cases, if you're waiting, for example, for the IDR account adjustment to be applied to your account, like you know that you're only going to get 120 qualifying payments because of the adjustment. If they're not able to see on their side before the adjustment is applied that you're close to that, then they might deny you that administrative forbearance. But you can typically request an administrative forbearance actually when you fill out the form. If you already have filled out the form, then you can contact them and ask to be placed into the administrative forbearance so that hopefully you don't have to make payments until you get the forgiveness. If you do make overpayments, over 120 qualifying payments on your loans, then you should be able to get that refunded. And but it's important to know that it's only the refund rules can be a little bit tricky, right? As far as like what will get a refund and what will not get a refund. So just know that, most likely you will get a refund as long as you're not doing any more consolidation on the loans. When you consolidate loans, only payments that are done after that last direct consolidation is what would count as an overpayment. So that it can get a little tricky in there, but generally you would get a refund.
Thank you for that, Jessica. And let's see, we're almost at time. We have time for maybe one or two more questions. All right, so one question we got is, let's see, the most upvoted one is, how do they determine economic hardship? My guess is that this is going to be a bit in the weeds, but what do you think, Jessica?
So there is a calculation that's taken into consideration to determine economic hardship. My general guidance when it comes to economic hardship is, if you qualify for an economic hardship, you likely are going to qualify for a very low income driven repayment, right? So if you are considering applying for economic hardship deferment, it might be better instead to apply for an income driven repayment plan. But unfortunately, we don't have enough time to go into the weeds of economic hardship right now. But there's a formula that's used that's based on your household income and how many people you have in your household.
Thank you for that, Jessica. All right. I'm just looking through the questions. All right, last question. If I consolidate my parent plus loans into my personally consolidated loans that are 7 years of the 10 years into the process, will that reset my timeline of PSLF?
It will not reset your timeline if you consolidate before December 31st, 2023. However, this is very important for people that have Parent Plus loans. Whenever you consolidate Parent Plus loans, it can impact your eligibility for different income-driven repayment plans. Okay, so you want to read the information that I have on my website about that. So that's my recommendation to you. Yes, you could potentially get your Parent Plus loans to have the 7 years of qualifying payments once the consolidation is done and once the IDR account adjustment is applied to your account, as long as you consolidate by December 31st. But you could potentially limit the income-driven repayment plans that you have available to you. So you have to do a little bit of putting it in the scale there, because especially if you're going to consolidate before the end of the year, you're likely only going to be able to do one consolidation, which means that you would have to pay. The only repayment plan that you would be eligible for as an IDR after the consolidation would be the income contingent repayment plan, right? And that is the least generous of all the repayment plans. So that means that for the next 3 years that you would be repaying this loan, you might be looking at a much higher monthly payment than what you might be paying right now on your loans. So something just to think about. And again, I recommend reading the information that we have on our website about this.
Thank you so much for that, Jessica. I know we're a little bit over time. The last thing I want to mention is I've seen several questions in the chat about certifying employment for previous employers if you're currently employed by a qualifying employer. So I shared a link in the chat to the PSLF directory, and you can use this to find the employer identification number as well as the PSLF contact for state agencies and higher ed institutions. So that's in the chat as well. But thank you all so much for coming with your questions. It was a great discussion today. Really appreciate all of you showing up. Thank you. And thank you, Jessica.
Thank you so much, everyone. Thank you to our interpreters and Katie. I hope you all have a good rest of your day.